Buying a car in America is supposed to feel exciting. New smell, shiny paint, the keys finally in your hand. But for millions of buyers every year, that excitement quietly turns into regret, sometimes before they even make the first payment. Because behind the friendly smiles and best deal in town promises, some dealerships rely on tactics they hope you'll never notice or never understand. Today, we're exposing the biggest car scams dealerships don't want you to know. Scam number 1, the payment trap. Let's start with the most common trick in the book. You walk into a dealership and say, "I want to keep my monthly payment under $400. The salesperson nods, smiles, and says, "No problem." Here's what they don't tell you. They're not lowering the price of the car. They're stretching the loan. A 36 or 48-month loan quietly becomes 72, sometimes even 84 months. Yes, the payment looks affordable, but you're paying thousands more in interest over time. So if the car gets totaled or you need to sell early, you're stuck paying the difference. The real question you should always ask isn't, "What's my monthly payment?" It's, "What's the total price of the car, including interest?" Scam number 2, the 4-square illusion. This one is subtle and incredibly effective. Dealerships often use something called the 4-square worksheet. It breaks the deal into 4 boxes: price of the car, monthly payment, trade-in value, down payment. Sounds transparent, right? Here's the problem. They move numbers around without you noticing. They might offer a higher trade-in value, but raise the car price, or lower the monthly payment, but increase the loan term. Everything looks balanced, but the math always favors the dealership. By the time you realize what happened, the paperwork is already printed, and the pressure is on to sign. The truth is, you should negotiate one thing at a time. First, the car price. Then the trade-in. Then the financing. Anything else gives them control. Scam number 3. This deal expires today. If you've ever heard, "Someone else is coming to look at this car later today," or "This price is only good right now," you've met the pressure tactic. Dealerships know urgency shuts down logic. They want you emotional, excited, and afraid of missing out. But here's the reality. Most cars on dealership lots are not rare. If it's there today, it'll probably be there tomorrow, or something similar will be. A legitimate deal doesn't disappear because you wanted time to think. Pressure is often a sign there's something they don't want you to review closely. Scam number 4, the add-on ambush. This scam usually hits you when you think the deal is done. You agree on a price, you shake hands, then you're sent to the finance office. Suddenly, the numbers change. You're told the car includes paint protection VIN, etching nitrogen-filled tires, fabric protection security packages, and somehow they're already installed. These add-ons can cost hundreds or even thousands of dollars while offering little real value. Worse, many buyers are told they're mandatory, which is simply not true in most cases. If it wasn't discussed up front, you have every right to say no. And if they refuse to remove it, that's your cue to walk. Scam number 5. Extended warranties that don't deliver. Extended warranties are often sold as peace of mind. What if the transmission fails? What if electronics go bad? Sounds reasonable, until you read the fine print. Many extended warranties exclude common repairs, require expensive deductibles, limit where you can get service, deny claims over technicalities. Some are so restrictive, they barely cover anything at all. And here's the kicker. Dealerships make massive profits on these warranties, which is why they push them so hard. That doesn't mean all warranties are bad, but buying one without fully understanding it is exactly what they're counting on. Scam number 6. Markup mania. In recent years, market adjustments became a quiet goldmine. Dealerships add thousands of dollars above MSRP, sometimes $5,000, $10,000 or more, just because they can. They'll tell you it's due to demand, or shortages, or industry standards. But many buyers don't realize this markup is pure profit. No added value, no upgrades, just extra cost. And once you agree to it, that inflated price follows you for years. Scam number 7. Yo-yo financing. This one hits buyers days, or even weeks, after they drive off the lot. You're told the financing is approved. You sign the papers. You take the car home. Then comes the call. There was a problem with your loan. The bank didn't approve the terms? You'll need to come back and sign new paperwork. This is known as yo-yo financing, and it's still legal in many states. When you return, the dealership may raise the interest rate, increase the monthly payment, demand a larger down payment, and now you're emotionally attached to the car. You've shown it to friends. You've already imagined it as yours. That's exactly why this works. In reality, many dealerships never finalize the loan in the first place. They let you leave under temporary terms, hoping they could renegotiate later. Scam number 8. Lowball trade-in switch. Another classic move happens with trade-ins. At first, the dealership offers a solid number for your old car. It feels fair. It feels like progress. But once you're deep into the deal, that number quietly changes. They'll say, the appraisal came back lower. There was an issue with the market value. We found something during inspection. Suddenly, your trade-in is worth less, but the new car price stays the same. Many buyers accept it because they're exhausted, pressured, or afraid of restarting the process somewhere else. The lesson is simple. If the trade-in value changes, everything is back on the table. Scam number 9. Interest rate markups. Here's something most buyers never hear. Even when a bank approves your loan at a certain interest rate, the dealership can legally mark it up. For example, bank approves you at 5%. Dealership offers you 7%. That extra 2%? Straight profit. This is known as a dealer reserve, and unless you ask directly, you may never know it happened. Over a long loan, that markup can cost you thousands of dollars, without improving your approval odds at all. That's why walking in with pre-approved financing from your own bank or credit union can completely change the power dynamic. Scam number 10. Gap insurance misdirection. Gap insurance can be useful, but it's often misrepresented. Dealerships frequently pitch it as essential, especially for long-term loans. But they don't always explain that. It may already be included in your insurance policy. You can often buy it cheaper elsewhere. You might not even need it depending on your down payment. Some buyers end up paying hundreds for coverage they already have, or don't qualify for. Again, it's not always a scam by itself. The scam is in how it's sold. Scam number 11. Certified. Doesn't mean perfect certified pre-owned vehicles sound safe. They're marketed as thoroughly inspected, reliable, and protected. But certification standards vary wildly. Some programs are strict. Others are little more than a checklist and a badge. Buyers often assume certified means accident-free, mechanically flawless, and worry-free. That's not always true. Without reviewing the inspection report, warranty terms, and vehicle history, certification can be more marketing than protection. Scam number 12. Document fees and mystery charges. One final trick hides in plain sight. Document fees, processing fees, dealer service fees. They sound official, but many are inflated or completely discretionary. While some states regulate these fees, others allow dealerships to charge whatever they want. Buyers see them listed and assume they're non-negotiable. They're not. If a dealership won't reduce the fee, they can often reduce the car price instead. Same result. Different line on paper. The common thread through all of these scams isn't dishonesty alone, it's confusion. Dealerships rely on complexity, pressure, and fatigue. They count on buyers focusing on monthly payments instead of total cost. They count on buyers trusting the process instead of questioning it. And most of all, they count on buyers believing everyone else understands this stuff better than they do. But the truth is, once you know these tactics, they lose their power. If you liked the video, please subscribe the channel and hit the bell icon.